Okay, folks, we are live and welcome to Sunday Night Futures Live. What we're going to be talking about tonight is the obvious. We had a credit downgrade of U.S. debt. The first time since 1917, the United States has had less than a triple-digit A-rated credit score. We're going to talk about the timeline of events about our credit history. And we're going to talk about UNH. I did a video yesterday on UNH, and I have an update on that. And I want to thank the folks that asked me questions. Great conversation in the thread, great inquiries. And I want to thank Team TrendSpider. They reached out to me, and they brought up a something that I missed, and they suggested I review it with you folks, and I totally agree. So we're going to go back to the charts of UNH briefly, and we're going to talk about something very, very bullish. So let's get to it. Let's talk about the opening price action here on the major averages. As we open, let's first, with all due respect to the audience, say hello to our friends. First up, we have Talon. Welcome. Welcome, my friend. Mr. Franklin. Tim, welcome. Sean, old boy, welcome. Paul, welcome. Lots of Floridians here tonight. The lovely Jody, hello. And Polish Taco. Hello, brother. Welcome. Okay, so we are obviously open here. George, welcome. We are obviously open here. And as expected, we are getting some selling. It's not horrific. We're seeing some support being tested. So this is not a complete washout at the open. You're looking at a 5-minute chart of the NASDAQ, the NQ, the futures version of the triple Qs, of which we are short. So we booked profits on our long QQQ position last week because I was concerned about it being overbought and the rally coming a little bit too far, too quickly. And we went short. Well, we were already short. We leveraged up on our short position. So we may be thankful for that in the morning. But what I'm looking at here is a resilient bounce. This is not the horrible sell-off that I had projected, and that's a fine thing. We have longs too, so they'll do well if we bounce back here. So you're seeing some good price action. Now the question is, are we going to fill this gap? And I think that the answer is going to be yes. But the question then is, do we put in higher highs? And this alert here would be above the closing price of Friday. Second 5-minute candlestick is now open. Are we beginning a bear flag? We'll see. Let's take a look at the E-minis. E-minis down 0.69%. Similar price action as to what we're seeing on the triple Qs. Taking a look at mid caps. They're not looking bad here. They're only down a 0.5 percentage point, a little bit more than that, but let's round it. Not bad. RTY, the Russell 2000, down 0.86%, consistent with the mega caps. Here too, though, you're seeing some support right where we had opened on Friday. So as it stands right now, we have yet to take out the lows of Friday on the Russell 2000. Let's go back to the NQ for a moment. That is not the same for the NQ. We have taken out the lows of Friday. We have since bounced. So here is short-term. That's a horrible line. Let me try that again. Here is short-term critical support. And we'll just throw up an alert there. Okay. Now, we've taken a look at the equities. I want to take a look at yields. Now, yields after the bell surged, and they continue to move up higher, just shy of a percentage point. Now, this is going to be the problem for the equity markets, especially for the small and mid-cap names, because they don't have access to the bond market, small caps in particular, and they're heavily indebted. So they're going to have to go to the banks to roll over debt, get financing, and that financing is going to be pretty expensive. Let's go back to comments. Mr. Pete, welcome. Good evening to you. Henrik, evening all. Hope you had a great time in the UK. I did. Awesome time. Yes, the pubs were great. As a matter of fact, okay, so I went to a local pub, a popular pub here on Friday night, and I ordered a Guinness, and I thought they gave me a shot glass of Guinness because a pint in the UK and in Ireland is not a pint here. A pint over there is 20. I had to do research on this because I was in shock with the size of the glass. It's 20 ounces over in Europe. It's only 16 ounces here in the United States. The bartender wanted to know, was it as good as over in Ireland? No, it was not. Definitely not. Talon, not good. Not good. I went over the chart of TLT on the week ahead commentary. You're a member, so you have access to it. I went over that that chart, and we're in a very, very narrow trading range going back a couple of years now. And if it breaks that trading range, TLT's got a lot of problems. So this is not good for U.S. debt. Now, the other way to look at this is that bonds have been in a bear market for going on, what, 3, 4, 5 years now? Perhaps it's already priced in. We should have had a debt downgrade years ago. So I think that there's a possibility that this could be a buy the news for the TLT. You just need to wait for the confirmation to occur, meaning it goes down, takes a beating, watch for a support level that looks good, start nibbling, much as what we did with UNH, Boeing, etc., the beaten down stocks. Then once you start putting in higher lows and recapturing support levels, then you're in. Then you know that this news was the signal to go buying the TLT, not sell it. So the knee-jerk reaction is often the wrong reaction. So while I think that TLT is going to go down tomorrow, that doesn't mean you should dump your position. I think that you should show a little bit of patience. You have to lighten up, consult your financial advisor. Prices of oil appears to be headed lower. We like Exxon, PR, CNQ, CFE. We can't buy them now. No. If oil, we'll go to the chart of oil in a second. Yes, Larry, you're right. Oil and the energy stocks are now correlated yet again. They lost their correlation for a while. They are now correlated, as goes oil, so goes energy stocks. We're going to go to that chart in a moment. Now, oh, no doubt about it. No doubt about it. Yeah. But I did ask whether or not the local pub here that I was at on Friday, whether or not they had even heard of Murphy's. Now, I like Murphy's. I love Guinness. I also love Murphy's. So if I did a blind taste test, I think I could distinguish between the two. But I think I'm probably going to do that one night. When it's a slow news night, I'm going to do a blind taste test of Murphy's and Guinness, if I can get Murphy's here in the States. And Beamish. Beamish is another one over there. I didn't like that one so much. Murphy's, I did. You're welcome, Talon. Of course, brother. TF Hatter, hello. Hello to you. Okay. Let's continue on here. So we know that yields are up. They're holding gains. Therefore, that means that bonds are going down. We also know that the 10-year yield weekly chart, in fact, let's go to it. Weekly chart last week, a very bullish week. We had broken out the week prior. Actually, no, I'm sorry. This is this week's candlestick here. We broke out last week to close above the 21-period EMA on a weekly time frame. Very, very bullish stuff. Now, if we start putting in new weekly higher highs, I think that the market's going to have a problem. And I'll go to the whys in a moment. Let's take a look at, we're talking about oil. Let's go to oil. Light sweet crude, down over a percentage point. So, yeah, to Larry's point, or Jedi Kid, as his name is here, you're going to want to avoid the energy stocks. They had a good week last week. We're going to want to watch how they close out the week this week. I think that this could be a potential buying opportunity. NQ just broke to lower lows or broke down below that support level. Let's go back to that chart for a moment. Yeah. Not lower lows, but it broke down below that support level. Let's create another alert here. Okay, that's the line to watch. Let's see whether or not, well, this is so weak that we didn't even fill the gap. That's pretty weak T. Okay. So our alerts are set. Set it and forget it. So we did oil. Let's take a look at natty gas. Natural gas down 2.43%. That sounds like a lot, and usually for an equity or any other commodity, that would be a lot. Not in this case here. You know, natural gas is the most volatile commodity that I know. And then comes silver. So natural gas moving lower here at the open. Let's check in with, I think somebody commented, TF Hatter, gold popped a bit. Let's take a look. I think that this is going to be the place to be this week. Again, folks, what we don't want to do is we don't want to go into the week with a guaranteed surefire attitude that the market is going to go straight down. We don't want to do that. All this could be is an opportunity for the shares of QQQ, of which we're short, to pull back and do a retest of support, setting up a higher low and setting the stage for potentially new all-time record highs. We want to be open-minded. We don't want to go in with a narrow-minded narrative, and I think that's a safe way to play it. Now, if you're on margin, you're really going to want to rethink that strategy. I mean, we're going to talk about the whys. You want to rethink about that strategy in a moment, especially if you're long when you going into the new trading week. So getting back to gold, yes, this should do well in this type of environment. This is geopolitical. This is not just a U.S. thing. It's geopolitical. Therefore, you could see the dollar rise. We're going to go to that in a moment. You could also see gold rise at the same time, which it usually does not. Let's check in with silver. Silver trading up just shy of a half percentage point. It was higher. It was all the way up to 32.60. but it faded. It's in a tight trading range. Let's check in with the US dollar. As expected, the dollar is weak. Here's the weekly close of the dollar. Now, it's had a good run. It was strong while I was over in Europe. It's funny how over in Europe, everybody looks at the currency conversion rate. I was in multiple Ubers over in UK, over in Ireland, and at least 2 or 3 of the drivers are talking about the weakness of the US dollar. You know, you're not going to get that here. It's really interesting in terms of what they look at relative to what we look at. So the dollar, this is last week's price action. This is not reflective of this week's yet. So we're beginning the week here on not good footing. We're probably before defense occurs, going down to 100.7 on the DXY. Let's check in with foreign reserve currencies. Let's go to the weekly chart. Let's check in with the euro, of which I still have some euros here. There we go. I don't know why it doesn't pick it up on the camera. 25 euro. I believe that this is this week so far. Yes, it is. So you could see what's happening here is that we are getting the potential for a higher low on the euro. It's in an uptrend. It looks as though we're getting ready to break out. Now, I suspect that emerging markets should fall tomorrow with equities if, in fact, we open down. Just a sympathy trade, plus the fact that emerging markets have had a decent run themselves. So what we want to be, and I've talked about this quite a bit with members, is that we want to be buyers of emerging markets, but in particular, emerging markets ex-China. EMXC is the fund that we like that has no China exposure. Most international funds, emerging market funds, have 30% China. If they ever invade Taiwan, those ADRs here in the United States go to zero like that, just like the Russian ADRs did when they invaded Ukraine. So that means a 30% haircut on your emerging market position, even if you're in a fund. You're not protected. So I suggest EMXC, no China exposure. Well, that was 42 likes. Now we're up to 236. Thank you for being here. Like, subscribe. Please help support the channel. Leave a comment, and I will certainly reply. TZ Burton, welcome, brother. So if I can get a like out of 243 people, that would be very, very helpful. Mr. Anderson, hello all. There will be a probability of price going back down to the 250 range on what? UNH? I'm not sure what you're specifying there. If you want to be a little bit more specific, we can talk about it. All right, so that's the euro. Let's take a look at the Japanese yen. I'm going to assume that that is up as well. That had a better week than euro last week. And yes, it is up. Similar setup here. The yen is in an uptrend, and it looks as though we're putting in a higher low. So it's going to be very, very difficult for the US dollar to maintain its current position or move up higher if you have euro yen. It's pretty much impossible. If you have euro yen moving up higher together, there's no way the dollar is going to rally. So I would say avoid dollars right now. What else do we need to go over here? We have so much to talk about tonight. What did I miss? Let's take a look at copper. That's probably getting hammered. Not too bad. We are long of palladium. I just want to check in there. This may be a good opportunity for palladium. I think it's PA. Yeah. Yeah. So palladium is up 0.67%. Let's pull out here. Looking good. We have higher lows on palladium. Members, we may be sending out an alert tomorrow that we'll be adding to palladium on a breakout above this resistance level. Let's just check quickly in with agriculture. I like to do the weekly charts. I don't follow them day in, day out. So looking at corn here, corn prices weak. They broke weekly support. But they didn't close there. This could be a setup for a big W formation. Let's set up an alert here. I'll tell you, if corn breaks out above where I'm about to set this alert, you got to be long of corn. Let's take a look at soybeans. Soybeans up. They broke out. This is last week's price action, but they faded on the week. I wouldn't buy it. I wouldn't sell it yet. Lastly, wheat. Wheat is holding support. Looks to be a bullish candlestick last week, so wheat looks like it may pop up higher. I'd be a buyer. I would buy here, small position, add more on rally up and through this pivot point. And I think that is all the news that's fit to print on the futures. Now, in terms of UNH, I spoke a bit about the technicals yesterday. I spoke a bit about the history of what's transpired with the company. I did a video on it. I'll see if I can link to it, but look on my YouTube channel. It's there. And let's go to the after hours price action on Friday to see what happened. I wouldn't think that much had happened, and it didn't happen. I don't think that you're going to get a major reaction on the part of UNH to this macro news, the deck downgrade. I think that the bulls have been slaughtered here. And while sure, there may be a reaction to the downside, I think that we've probably put in the lows here. And would I be a buyer on another pullback? Yeah, no doubt about it. I'd be a buyer. So UNH, I would add more in a pullback. I don't want to buy any more until after earnings, because what I think is going to happen here, you have a new CEO in at UNH, and what they have a tendency to do, especially in an environment that they find themselves in now with all the bad headline news out there, he's going to throw it all out there, because another quarter from now, he gets blamed if that news comes out in a quarter or two. He wants it out now. It's called the kitchen sink quarter. You're going to see it. They report, I believe, in June. Yes, they do in June. Yes. They report in June. So I would refrain from putting on a massive position if you're looking to get overweight until that kitchen sink quarter. Any negative pullback on that news, assuming that the share price is trading in a range around where we're at right now at earnings, I'd be a buyer of that dip, because I think that's the kitchen sink moment. And from that point forward, I think you're going to probably have good news. And if you get a headline that comes out that is probably going to be 2 years from now, UNH agrees to settle with DOJ for $2 billion, you're probably going to see the shares up in the futures market. If they're down, buy the stock, because in all probability, that is a buy the news event. So that's the psychology of the market. That's the way it was when I got here, and just sharing my experience with you. So We're going to talk more about UNH in a moment. Wow, a lot of Floridians here tonight. I love my Floridians. I got family down there. So love you guys. Thanks for being here. Like, subscribe, you know the deal. And hit that bell when we get notified when we go live. Okay, sip of water time, and then we're going to talk more about the downgrade. We're going to talk more about UNH. And then we're going to do chart requests for those who posted in the forum. If you're not currently in our forum, that's me. This is the video I did yesterday. Right now, we're at about 4,000 views in the past 24 hours. I'll share this out. Watch it at your leisure. Leave a comment on it. I'll definitely get back to you. I was leaving comments a good portion of the day. I think it was a lot of comments there. So thanks for the engagement. I love it. And check it out at your leisure. So when I sent out the video yesterday, and a lot of people either clicked on the link over to TrendSpider, and a number of you subscribed for a subscription over to TrendSpider. You saw the value, and thank you for that. So they took notice and they watched the video, and they're like, hey, because they have a huge team there. They said, hey, did you see the insider buying? And I said, you know what? No, I didn't take a look at that. So I said, I'll share it because they know I have a live stream on Sunday nights. I'll share it tonight. And here we go. So here's the insider buying. From the 14th through the 16th, you had a lot of insider buying here. This guy here is the CFO. Now, the reason why this is very important to me is that the CEO, his job is to sell the company. He wants the stock price to go up. CFOs are bean counters. So if the CFO is buying stock, that's very, very good news. Add to that, you have one of the directors, Stephen, I believe that this guy here, hold on one second. Let me validate before I speak. I want to validate. Yeah. So this guy was the director. He is now the CEO. And he bought $25 million worth of UNH on the 16th. So if you have the CEO and the CFO buying, I really don't care about the DOJ investigation, to be honest with you. Usually it's just the government coming in to greenmail a company anyway. So they'll pay a fine. And if these guys are putting their money where their mouth is, then it's good enough for me. So good news there. And just a recap of as to why we bought when we did was on the weekly chart, we tagged, I was about to say tagged these 2 or 3 lower bands of support. We were buyers down here. Also, daily time frame, and these are automated charts, folks, automated trend lines. On TrendSpider, the lines draw themselves. We also hit a fractal support level. We bounced off of it. It was a buy all day long. And plus the stock is at the cheapest valuation on any measure, price to book, price to sales, PE multiple, into over 10 years. So it's kind of a no-brainer to be buying the stock, especially if the insiders are buying. Very, very bullish here. RLs are the Floridian as well. We have half the state of Florida on here. We have about 300 people on. If I could ask you folks, please like, subscribe, you know the deal. And if you enjoy TrendSpider, please use the link below. At a bare minimum, get 35% off. If you're watching it on Twitter, link above to get 35% off of any subscription. All right, we'll be using the this chart in a little while to go over chart requests. And for those folks that are not on our or in our forum, it's free. And that's where you enter your chart requests. So this is where you leave it. I don't know why I have to leave cookies. George, UNG, AA, Chewy for, that's an old one, huh, Franklin? Paul, Bristol Myers. Okay. So that's where you enter your symbols. I will put this link in the chat box. No need for a credit card. It's free. Mr. Dove, I might get in UNH leaps. That's a way to play it. No, I wouldn't. I'm sorry. Scratch that. I would not play it that way. The reason is with UNH, I respectfully have to say, don't do it. I would first check the IV rank. I can't do it here live, but I would check the month that you're looking at. If you have a Fidelity account, there's a way to see how expensive the options are on an IV rank going out 30 days, 90 days, 120 days, 360 days. You want to see whether or not those longer term leaps are as expensive as the short term. If you have an IV rank over 40, over 50, I wouldn't buy a leap, because what's going to happen here is when the shares move up higher, you're going to get IV contraction on that position. So if you're going to do it no matter what, think about selling a call as well. Buy a call, deep in the money call, and simultaneously sell a deep out of the money call. That will give you some protection against IV crush. Now, when you take a look at the IV rank of UNH, it's at 100%. So those options are very, very expensive. Now, this is short term, going out for the next, say, 30 to 90 days. I don't know what they're going to be 120, 200 days from now. Maybe they're reasonably priced. I doubt it. I think they're expensive, but I would check that out first before you pull the trigger. Cool. Hope that helps. Okay, so you could think about selling the leaps. Sell the puts and get paid for the IV crush and the time decay. You're not going to get much time decay now, but if you're bullish and the shares move up higher, then the puts depreciate. So you make money by selling the put, and you are still long. Right? That's just another way to play it. All right, so that's pretty much UNH, I believe. Okay, so let's talk about the debt clock here. I got a question about UNH. Hey, Bob, if the futures are down tomorrow, would you wait to buy UNH after the open market opens, thinking some institutions are selling because of the funds, or would you buy pre-market? I would watch the lows and the highs in the pre-market. This is what intraday traders do. They look at how the stock trades in the pre-market or at the open, and then at the high and at the low, they put alerts. So if they gap it down at the open, or it trades down in the pre-market and it trades up and through the highs, and you get a pullback and it fails to take out the morning lows, and you break out to new session higher highs, that's when I pull the trigger, because that's the market calling BS on the shorts. So I wouldn't buy in the pre-market. We don't know what we're in for tomorrow, because right now we're looking at illiquid. I shouldn't say illiquid. It's liquid. You're not looking at a lot of volume right now. So we have no idea what the big money is going to be doing at the open. So if we open where we're at now or weaker in the morning, you could bet that in all probability, we're going to go lower at the open, because the liquidity becomes far greater for the institutions to get liquid. So I would wait until after the open, take note of the lows of the session. If we take out the pre-market lows on UNH, I would wait. There's no rush there. If we fail to take out the pre-market lows and we take out the highs of the pre-market, then I'd probably be a buyer. But I want to do it on strength. All right, so I have no problem if the markets are going down and UNH is showing strength of buying UNH, but that's what I'd be looking for. It's still a stock that has a lot of headline risk out there. Shorts still are not believers that the stock is done going down. They should be, but a lot of them aren't. They're asleep at the switch. They made a lot of money and they're complacent. So it may take more for them to get squeezed. All right, so you're welcome, Tim. I hope that helps, Mr. Dove. Hope that helps. Okay, so U.S. national debt, we're going to be at 37 trillion in debt by the end of the month. The Doge clock is saved. They're saying $446 billion. Any research that I've done so far shows a lot less. The fact that they're going to do tax cuts is not going to help the situation here any. Although I don't want to pay additional taxes, I really do want a tax cut. All they're going to do is take out more debt to pay for the lost revenue. So all they're doing is buying votes at this point in time. So they should have downgraded our debt about $30 trillion ago to below AAA, all three agencies, but they haven't. This is the reality that we live in. It's complete bananas. I voted for President Trump. I see no indication that he wants to curtail spending, and it's probably going to be the bond market that forces that hand at some point in time. The bond vigilantes at some point in time are going to take control of this problem. And I don't know if it's going to be tomorrow. I don't know if it's going to be in 10 years. But at some point in time, that's how it's going to get resolved. This is unsustainable, folks. Moving on. Let's talk a little bit about the timeline of events of debt ratings from 1900 to present. 1917, U.S. formal credit U.S. rating issued. We were issued a AAA rating in 1917 by Moody's. It's the first time since 1917 we no longer have a AAA rating with a rating agency. Through 1941 to 1945, even with all of our debt back then, debt to GDP was well above 100%. We were still a huge industrial manufacturer and global leader. We had all the gold in the world in our vaults because the world gave it to us to buy weapons and goods to fight the war, and we were building all the arms to sell to other nations. We can't do that anymore. Then came Bretton Woods. We became the world's reserve currency. Good stuff. We kept our top tier dominant status. 1971, you would have thought we got a downgrade then. With all the inflation, we were at war in Vietnam. We had the New Deal, not the New Deal, guns and butter with Lyndon Baines Johnson. No downgrade. 1980s, under Ronald Reagan. I'll tell you, I remember those days, golden days. The Democrats in Congress were screaming at him about this $500 billion deficit that we had. It was so minuscule in comparison, and they had their heads were on fire about this debt. So no impact back then. 1980s, rising deficits under Reagan. No change in our credit rating. Then it all changed on August the 5th of 2011. S&P downgrades U.S. from AAA to AA plus. Cited debt. Market reaction, stocks fell sharply, treasuries paradoxically rallied. We're not seeing that this time. We haven't seen it since, let's bring up a chart of TLT. I'm going to bring up a quarterly chart here. Let's go to the monthly chart of the TLT. This is a bear market in bonds. For the first time in history, we have a steepening yield curve where, for the first time, we did not have money go to a safe haven, which is traditionally bonds. And ever since here, back in December, sorry, scratch that, October of 2023, we have been in a trading range on bonds. And this is what I alluded to earlier when Talon asked the question about what's going to happen with the TLT. There's no reason whatsoever to believe that we're going to get a rally in bonds. Right now, you're seeing on this news, you're seeing yields move up higher. Guess what that means for bond prices? That means they're moving lower. So if we see a break here on bonds below the 82.35 mark as measured by the TLT, that means that yields are skyrocketing. And you don't want to touch small caps. You don't want to touch mid caps. All you want to touch are stocks, if any stocks whatsoever, that have large cash positions and they don't need to borrow. You are welcome, Tim. Gold should be a big winner. Yes, I agree, Town. Yep. So getting back to, I'll wrap this up quickly on the bonds here. So I don't expect treasuries to rally unlike what they did back in 2011. I think they're going to continue to fall. Maybe this is a buy the news event. I'm going to keep an open mind. But if we break that 82.35 mark on the TLT, that's game over. August 1, 2023, Fitch downgrades U.S. from AAA to AA+. Second major downgrade in history. They cited erosion of governance. What's changed? Nothing. Political standoffs and a growing fiscal burden. Then, of course, on Friday, May the 16th, Moody's downgrades U.S. debt from AAA to AA1. For the first time in U.S. history, the United States has lost its AAA status with all three major agencies. I think it's sad. I think it's really sad. So let's talk about history and what we can expect during times like this. And let's do a comparison of where we're at now in terms of valuation, both on a trailing and forward-looking multiple to get a feel for what could happen right now with this news. So I did a little bit of research over the weekend. So here's the reaction back on August the 5th of 2011, S&P downgrade, market corrected 6.67%. The Fitch downgrade from AAA to AA+, August 1, 2023, down 5.22%. Today, of course, we don't know. So here are in blue the drawdowns. Let's see if I can make this smaller so make it more viewable. Okay, so here are the drawdowns in blue. Here is the S&P downgrade. Here's the 6.67% downgrade or sell-off. And here is the 5.22% sell-off here in blue on Fitch. Now, here's the rub. This line in green is the valuation of the market. This is the Shiller PE ratio, folks. 36.6 on the Shiller. I hid this for a purpose. This is actually wrong. It's actually higher. So back in 2011, the Shiller multiple was at 21. The forward multiple was at 12.5. Fitch, we had a multiple of 30 on the Shiller. 19.5 on the forward-looking basis. So we're a bit frothier at that point in time. This time around, we're a lot more frothier. A lot more frothier. So I think that this time around, now that we have all three rating agencies having downgraded the U.S. debt, that we may see a more pronounced sell-off here for a couple of reasons, not just valuation, but it's also the technicals of the market as well. We're going to talk about that in a moment. Here is the Schiller. As I mentioned, that was from ChatGPT. It's actually wrong. It's actually 36.6. I want to take a look at what the market participants are saying about yields, a cut potential. No real change here at current. If anything, the probability of a cut has declined, going all the way out to September. October is still about 85% probability of a cut. Now, the Fed's balance sheet, which is another way for them to manipulate yields, I think that this is going to be their go-to at some point in time. Because if yields continue to move up higher, cutting rates is not going to be the answer to that problem, because what you're talking about are the 10-year, 20-year, 30-year bond yield moving up higher. The Federal Reserve doesn't have a lot of influence over that. Think about what happened back when they cut interest rates by a half percentage point during this most recent round of rate cuts. Longer term yields went up, not down, up. So what they're going to need to do is they're going to need to go from this reduction of their balance sheet, which is a good thing. I approve of this. What they're going to have to do is they're going to have to rebuild it and build it up big. Because if they're going to influence 30-year bond yields, 20-year bond yields, they're going to have to buy a lot of debt. And guess what happens when the world sees that we're monetizing our debt yet again and we're not cutting spending? Well, we're up for another another round of ratings cuts by the agencies. Think about it. They think we've lost our minds. Okay, let's continue on here. If we need to go over to do the chart request, we'll do that. Earnings coming out this week, folks. We have not much, nothing really on. Looks like we have some Chinese companies on Monday. Home Depot pre-market on Tuesday. Viking Cruises pre-market. Palo Alto Networks, great company, after the close on Tuesday. Pre-market Wednesday, we have Baidu, we have Target, we have TJ Maxx. After the bell, Snowflake, great company. Zoom comes out. So really, there's not much going on here in terms of earnings this week that could really rock the market. Analog Devices, BJ's, Advanced Auto Parts, great company. Deckers, great company. Intuit, that's just a cash machine. Workday. So that is the earnings report. This is from Liz Ann Saunders. Citi U.S. earnings revisions index has been negative for 20 consecutive weeks. So companies continue to lower guidance. Now, I don't want to leave off here with negative news, but on the same topic, this is from Lance Roberts. After 6 consecutive months of lowering earnings bar, analysts have turned positive on forward-looking outlook. So the analyst community, this is also out of Citigroup, the analyst community is becoming a little bit more bullish, more so than, this is just the momentum, folks, more so than the individual company. U.S. auto loan delinquencies are right up to the 2020 highs and just off of the highs post-financial crisis. So the consumer is still very, very strapped, and this is a big problem. Big problem. Okay, let's go to the technicals of the S&P, the NASDAQ 100. So this is just a quick, easy view of the NASDAQ 100 in blue. It's overbought on RSI. It could still move up higher. I don't think it's going to. I think we're going to see a rollover here on the NASDAQ 100. And sorry if you folks are long of it, but we sold our position last week and we are now net short of the Qs. Now, my other long positions, they're probably going to get hurt. So let's do some chart requests and we will wrap it up. Let me do a refresh. All right. Not a lot to do tonight. That works. We have UNG. That's Natty Gas, AA, Alcoa Aluminum, Chewy, great company, Bristol Myers, and we have CPB. Campbell's. Is that Campbell's Soup? Let's do that one first. Folks, we're going to be using our friends over at TrendSpider. Take advantage of their alerts, their scans, their so much. I already went over how I use it to get into UNH, and we are profitable on that trade. So please take advantage of that 35% discount below and above on, if you watch us on Twitter, above. All right, CPB. Yeah, I was right. It's in a downtrend channel here. You know what? Let's get rid of my lines. I just put the automated trend lines off, and I kind of like them better than mine. So what we did, this is interesting. What we did last week is that we flirted with the lower band of support. We didn't quite touch it. It's not going to show me on a monthly chart the pre-market activity. Let's do this. Where are we at support? This is probably not liquid in the pre-market. 35.52. Let's go to a 4-hour chart. Did it touch in the? Oh, it did. This hit monthly support on a pre-market basis. Was there news last week on Campbell that would cause this this sell-off? Because it looks as though we tagged in the pre-market this support level on CPB. Weekly chart. All right, so I'm bullish on it on a monthly time frame, not so much on a weekly time frame. So what's going to happen here is that on the week last week, we reversed to close up. That's good stuff. And I think that we're probably going to rally. The problem is that you have a lot of resistance up here, 2 resistance levels, in fact. Again, click of a button. And something to be wary of. Let's overlay the heat map. Yeah, right in this range here, you have significant resistance. So I'd be a buyer if we closed above 36.75. Close above that, to me, it's a buy. Let's go daily view. Let's take the heat map off. We broke out on a daily chart. If you're going to trade this as a swing trade, can we overlay the weeklies here? I'm not sure why it's, oh, I know why. Okay, let's see if I can do that. Yeah. So what I just did is I just overlaid on a daily chart weekly resistance. So, you take this off, and right now Campbell's looks pretty bullish, right? The problem is that what the daily chart is not showing you is that you have an obstacle getting between where we're at current and this price target here at around 39.33. And that problem is NASDAQ showing strength. We'll go to that chart in a moment. The problem here on the daily chart is that you have weekly where is it? Weekly resistance immediately above. So I would be a bit careful here on Campbell's soup. I'm not sure what's not letting me. Let me do it before. They must have a glitch tonight. Okay, let's check back and see what the NASDAQ is doing. NASDAQ. This is the NASDAQ 100. Now down only 0.67%. Looks like we are going to fill the gap here. I already have a couple of alerts set up here. Set up another one. Okay, let's go to our next. So to close it out with Campbell's soup, I would wait until we recapture weekly support right up here at around, what did I say before, 36.75, around that neighborhood. And then that gives you a shot up to that $39 price on Campbell's soup. So it's good for a trade. UNG, this is natural gas. Natural gas falling at current. This is a weekly view. It looks as though natty gas wants to move lower. These are the auto Fibonacci retracement levels. Yeah, there's a lot of rejection up here at, let's call it $18 per share. I think we're coming down here. $12, $12.68. You do have some support here at $15.29, but if we break that, this is exactly where we're going on UNG. Let's go daily chart. Yeah, broke support on Friday. I'm not a buyer here. I wouldn't short it. It's way too volatile to short. I would wait for it to hit support before getting long of it. AA, Alcoa. If the tariffs were still on, I would be more constructive, but they're not. Good week last week, but it closed right into resistance. I'm not a buyer here. If they close it above $30.50, then I would revisit it. But until such time, I wouldn't do it. I want to see a breakthrough. I don't want any sensitivity. And the alert's set. So we set it and forget it. Yeah, daily chart. I mean, way too much resistance here. We've already had a nice rally. At this point, this needs to show us a higher low. It's screaming, we need a higher low. So let's get our crayon out. If it does pull back, where do we want to see resistance or support, I should say? $26 and change on AA. That would be attractive. Looking at Chewy for Franklin. Let's go to a monthly chart here. This is interesting. So look at where I just put the automated trend line here. Look at where we bounced right off of that automated trend line. Let's go to a weekly chart. We broke out last week. We recaptured $40. Let's call it $41 per share. I want to see a check back, and we're probably going to get it. Keep a little bit of sensitivity, not too much, little bit less. There we go. Chewy looking bullish. Let's go to daily view. Yeah, it's a little bit extended here. I would wait on this one. I really want to see it test this weekly support level in earnest. I would wait. Here's the way I'm looking at it, is that you're in a ascending wedge formation, and it can continue up higher. It could break out and continue up, but the probability is improbable. So this stock recovered nicely. It's taken out prior highs. I just now want to see a retest, and I want to see that it validates that it's able to hold these support levels. So I would wait for that weekly retest and then begin to build a position. Let it digest some of these gains. But this chart's telling me that it wants to take a rest soon because it's come a long way in a very short period of time. I mean, it was at $30. We're now at 41.76 since the end of April. That's a big run. So I'm not a buyer here. I would wait for a consolidation. BMY. Bitcoin getting buying pressure, 105,700. If it's getting buying pressure, I forgot to go over Bitcoin. Start looking at Coinbase tomorrow on any pullback, highly correlated to Bitcoin. Let's go to BMY. These are my old support and resistance levels on BMY. Nice reversal week. It looks as though there's definitely some resistance in here. It looks as though what's setting up here on Bristol Myers is a higher low. What are the insiders doing here? Nothing. So I'm a buyer. Nibble, very small position on a close above 47.52. I would avoid if it breaks down below 43.68. In fact, no, I wouldn't short it too close to resist or support. And I would buy more on a breakout above, let's call it $50 a share. We may be seeing a bottom put in longer term on BMY. This stock has done nothing for years. This is just one big trading range. I don't see anything attractive about it. I don't see unless the fundamentals have changed here. I'm not a big proponent of this stock. But if it does break above those support levels I just pointed out, then go for it. All right, Bristol Myers. We did CBB. Let's see if I missed any in the thread. HELE and Pfizer for Michael. Michael, you can't give me all these to go over, pal. I'll go over the first two. I know you're a Pfizer guy, and we're going to leave it off there. I'm kind of over with time. And Polo's Taco, I'll go over yours as well. I would have missed that. Try to keep these requests under this thread so I don't miss it, please. HNST. Okay. Helen of Troy. Let's go monthly view here. I mean, you're coming down here. I wouldn't touch it until it came down to $16.66 per share. These are the automated trend lines again. Let's go to weekly view. Yeah, I think you got to wait here. You're buying. This is like a Nemo moment. You ever watch Nemo, the cartoon movie? You don't swim in the middle of the ocean. You stay by the coral reef. Well, these support levels down here, that's your coral reef. That means safety. So I would be a buyer at these levels. Be an emo. Daily chart. Potential higher low here, but again, not a great place to buy. I would wait for support to get hit. Tim. Hey, Bob, don't forget, hit the previous comments on the thread. More stock requests are there. Okay, I think I did that, Tim, but I'll double check to make sure. Thank you. You're very welcome, Franklin. You're very welcome. Hey, folks, we have about 350 people on. If I can ask you to like, subscribe, I'd really appreciate it. Hit that bell button to get notified when we go live. That's great. And don't forget, take advantage of our discount to TrendSpider. And you can also sign up for my coaching on the website. That link is below as well. Let's go to HNST. The Honest Company. What the heck? Never heard of this one. The Honest Company. I never heard of the company. Let's see if we have any indicators that'll help us out here. There's really nothing. There's not much data here. That's why. It's a fairly new company. Publicly traded, meaning. What can I use here? Not even the fractals. There's not enough data for the fractals. Let's check out the Stokes. Nah. No good there. There's not enough data. Let's get off the monthly chart. Let's go to a weekly chart. That's better. So we've begun to move up higher here. Nice little breakout. Continuation move higher on HNST. Let's see what their revenue growth looks like. Wow. Good revenue growth. Okay. Let's go to a daily chart. Daily chart where we're going to hit resistance here. at $5.76. Just be aware of that. I would not initiate a position here on HNST yet because we have overhead supply immediately above. So I would just be careful there. Let's overlay the heat map. Not much resistance. What are the insiders doing? You saw some insiders selling here, but that could be for any reason. They could be buying a beach house or whatever. What really matters to me is insider buying, and I'm not seeing that. So it looks okay. I mean, it's going to look really great once you close above $6 a share, but we're not there now. I wouldn't initiate a new trade here, but it's looking interesting longer term. All right, let's go back and make sure I didn't miss anybody. That was a Polish taco. I did HEL. Oh, I didn't do Pfizer. Michael would be pissed if I didn't do Pfizer. PFE. Polish taco, good cash position. That's the honest company. Thank you for that. You too, Jody. Have a great evening. Thank you for being here, of course. All right, Pfizer. I'm curious. How are their fundamentals looking? Ugh, not good. Not good at all. So, would I buy this stock? No. For many reasons, I wouldn't buy this stock. I think that at some point in time, there's going to be hell to pay for COVID and their vaccine. If there is justice, then we'll get that. And the share price is showing that people are very concerned about that possibility. We've lost well over 60% of the value since the highs of 2022. And it looks as though it's going to break lower on a monthly time frame. Now, we're halfway through the month, and we do not have a new monthly lower low. The however is that it appears as though it wants to go lower. So I'm not a buyer here. I don't have any support. If you're using the Fibonacci retracement tool, look at $18 per share as your support level. The share was closed on Friday at 22.83 on a percentage basis. That's a big move lower. So I'm not a buyer here of Pfizer. In fact, I think it goes lower. Let me make sure I didn't miss anybody. HELE, UNH, I did. Previous comments. Tim. Thank you for that, Tim. Okay, we're going to leave it off with these two, TGTX and CYBN. TGTX, TG Therapeutics. Monthly chart, pretty bearish chart here. You have an outside reversal bar on the shares on the month, or also known as a bearish engulfing. And folks, by the way, link below, I have an infographic showing you the support levels on the triple Qs. It's free. Take advantage of it. All you got to do is enter your email address. We hate spam too. And it'll be an infographic of where all the support levels are on the triple Qs. I link below for that. What else do we have here? Let's go to the weekly view. Yeah, I don't want to touch this stock. It broke weekly support. It did a check back. That's a retest. This is probably going to fail and go lower. Stokes is measured by momentum. Momentum is measured by Stokes. Is going the wrong direction. Daily chart. I'm not a buyer here. I think this is going to break south. So I would avoid this for now. Let's go to CYBN. Pfizer CEO said tariffs didn't hurt earnings. Yeah, I don't trust CEOs. Let the CFO come out and tell me. I believe the CFO. CEOs, their job is to pump up the stock. So CYBN, weekly view. I'm not a buyer here. You're in a downtrend. We're bumping up against resistance. The more we spend at a resistance level when you're at a downtrend, the greater the probability of the failure. We're not breaking out any attempted rally towards that resistance level. It's just not happening. So I think that ultimately this is going to get resolved downward. Weak stocks tend to get weaker. So with that, folks, I want to thank you all for being here. Please like, subscribe. You know the deal. Hit that notification bell when we go live. Link below. Again, the infographic on the triple Qs. Get notified of where the support levels are. Don't forget to join our community. It's free. There's a link. I'll post it again if you do not have it. And don't forget our friends over at TrendSpider. Link below on YouTube. Get a bare minimum 35% off of any plan, and link above on Twitter. Everybody have a profitable trading week, and I will talk to you soon.